This is Mara Dobrescu, and I'm here at the Pan-European Morningstar Awards for Investing Excellence. I'm here with Michael Krautzberger, who has won the Outstanding Portfolio Manager of the Year award. Congratulations, Michael, for your award.
Thank you very much.
Well, it's been a challenging period for fixed income investing. Bond yields are extremely low. Investors may be asking themselves, is it even possible to still make money from bond investing in these circumstances? How have you adapted to this?
Yeah, it was definitely a decade with a fair deal of crisis as well, the Euro crisis, the US crisis. I think our strength was always not to be too top-down, just saying, oh, yields will rise, we need to be short duration, or we need to long credit, being very bottom-up, having a team approach, and really creating a portfolio of bottom-up trades, which are not necessarily dependent on the yield level. For example, overweighting one country versus another, being long financials versus industrials, having a yield curve trade. And I think that will be what we are focusing on. What we really need is a world where things are happening. And if you look at political risks in China, in the US, if you look at central banks where it's quite unclear what's the next step, I think there's still a lot of opportunity for alpha and hopefully to have reasonably attractive returns going forward as well.
Okay. And what do you think sets your investment style really apart from most other managers in this field?
Yeah, I think what sets us apart is really this focus on bottom-up and really finding high confidence trades we then build a portfolio of, and also sometimes to step back and say, oh, you know what? At the moment, we don't have a strong view on euro-dollar. We build a lot of other trades, but we leave euro-dollar alone until we have a strong view. So always almost observing the market, where's consensus, where's the market priced, and then coming in when we feel, oh, now it has really gone too far for one side. So building a diversified portfolio of relative value, and also have a very much a team approach where not every trade is dependent on me, where really everyone is contributing trade ideas.
Okay. And what do you make of the competition from passive investing in European fixed income? Is it a threat? Is it an opportunity?
Yeah, working at BlackRock, I get that question quite a lot because iShares is quite a relevant passive vehicle. And I actually worked for 2011 to 2014. I worked for our German office and was responsible for the iShares business there. So I actually have some emotional attachment to that business, and even at that time said, well, if you're an active manager, you have some pressure to beat the benchmark, by more than the cost. And if that's not happening, it doesn't matter if it goes to passive or if it goes to a successful competitor, it will not stay with you. So to me, it didn't change the pressure. If you are an active manager, you always have to show value for money. And maybe it's almost a good thing if we now maybe have an investor who would say, oh, I don't want active anymore, it could stay in BlackRock. Mm-hmm. But obviously it's my job to convince them that active is a good proposition. Hopefully this award shows that we are doing something right. And I would actually argue the negative yields in Europe will probably help that people will look for active solutions, because you know that yields will be very, very low if you stay in passive.
All right. Well, thank you for your answers. Congratulations again on your award. Thank you for watching.